Hey guys, Shauna, your tax goddess. Today's video is going to be about some of the simplifications that are currently available in the current tax code. So, here we are, 2019. There's four main sections, okay? And you're going to see me kind of tilt my head because I want to make sure that I get you guys some details. I've got some stuff on the screen that I want to make sure I'm getting you those specific details. So, let's start with number one. All right, this is the Small Business Accounting Method Reform and Simplification Act. Okay, so this is section 13102 IRC Internal Revenue Code 448 tax code. I know. I promise I won't do it much. Anyway, here's the long story short. All right, previously, if you were a business and your gross revenue per year was $10 million or more, and that is considered small for the IRS, you had to do some very specific accounting methods, all right? So that has been changed, which is lovely. Now, if it's 25 million or more, so that's a big gap, right? 10 to 25 million. So if you're a business that was required to do, for example, 263A inventory adjustments, if you've ever heard your CPA talk about 263A, if you were required to do accrual versus cash, okay, that is one of these adjustments. If you are now 25 million or under, you can actually opt out of those things. You can continue doing them if you want to, okay, but you can actually opt out of them. And for a lot of businesses, especially, for example, with the 263A, with that inventory adjustment, that's going to be a massive write-off on your 2018 taxes, your 2019, moving forward whenever you make that adjustment. So that if your CPA has not talked to you, if you've ever heard the term 263A, and your CPA has not mentioned this to you, and you're under 25 million in gross revenue, it's at least worth the question. Can we do this? Should we do this? I guess, can you do it? The answer is yes. Should you do it is kind of a different question. You want to run some calculations with your CPA or with your tax strategist to see if that move is going to make sense for you. So this typically comes into play with people that are manufacturing or building things, construction, solar panels, all right? So 263A, especially for that inventory, is a big thing. All right. So, what's really nice about this is that basically your CPA can file a form. It's called a 3115 with something called a 481A. I know we're tax code, but these are important. So a 3115 with a 481A adjustment, and take all of those typically expenses against your 2018-2019 income. So if they haven't looked at that for you, it is definitely time to take a look at that. These are what are called automatic changes. Okay, so typically there's no user fee. You don't need a private letter ruling to get these changes. In some cases, we're seeing adjustments of $300,000, $400,000, $500,000 adjustments against net profit, which is lovely, right? Any business owner should be very pleased with that. Now, one of the next ones that you want to look at, of course, is changing to cash. So like I said, going from accrual to cash, it's the same thing. It's that $25 million. So if your average gross receipts for 3 years is below 25 million, you can switch to cash. All right. Same thing. It's a 481A adjustment on form 3115. The third exemption there, I'm sorry, we already talked about the 263A. The third one is the exemption from accounting for inventories. Inventory, no more inventory, okay? Now, you still probably want to have inventory to be able to manage your business, but on an accounting standpoint, on your taxes, to not have to do inventory is massive, massive. Now, one little caveat here, okay? So for any of you that are in the cannabis industry, okay? There's a warning, which I guess there's a warning in that industry generally, but there's some very specific rules that happen to cannabis industry owners, okay? Currently, under the current laws at a federal level, cannabis is still pretty much illegal, so these are rules that apply that are very, very specific. So code section 280E, all right, for cannabis industry only allows cost of goods sold as a tax deduction, okay? So that would be growing the plants, the soil for the plants, the labor for the plants, only cost of goods sold, not overhead expenses. So advertising, not a deduction, okay? Now, if you make this election, all right, the election we're talking about, these to switch back using Form 3115 with the 481A adjustment, if you make this election to be exempt from accounting for inventory, you may lose all of your deductions. All of them. So if you were in the cannabis industry, okay, this is what's called 471, section 471 for inventory. If you're in the cannabis industry, be really super cautious with this and make sure that you're working with a CPA and a tax strategist that understand your industry, okay? Very, very particular. You certainly don't want to lose all of your deductions. That would be really bad. Now, the fourth category, okay, this one is a little bit special, and it's specifically for small contractors, okay? So this particular adjustment, if you're going to make this adjustment, has to be done on a separate Form 3115. It cannot be with the other three, so you'd have 3 on one form and 1 on its own separate form. But this adjustment effectively allows you to change your method of accounting for long-term construction contracts, okay? So if you're a contractor, if you're in construction, you'll know what that means. You understand those pieces and those parts, but it's very, very particular to construction. So if you're in construction, you have questions, your CPA has not brought this up to you, whether you should or should not make this change, definitely time to reach out to a construction-specific CPA. We'd be happy to help. So a very long story short here, guys. I know today's video was a ton of tax code, all right? But basically the commentary is, in the past, if your gross revenue was 10 million or more, you had to do these special accounting rules, okay? And they really put a damper on some of the great tax deductions that other businesses were able to obtain. Now, with the new rules, with the reform, that $10 million limit has been bumped up to 25 million. So if you're in any of the industries that I talked about in today's video, if you have questions, if you've ever heard the term 263A from your CPA, definitely double check with your CPA and your tax strategist, right, to make sure that are we going to make this adjustment to get out of it? Are we going to stay in it? You know, what is the plan, right? It's good to have a plan. So if you have any questions whatsoever, don't hesitate to reach out to us, taxgoddess.com, or of course dropmytaxes.com. This is the kind of stuff we do.